Hello friends, I previously shared a seasonal Nasdaq strategy, so why not continue with the European indices? Underpinned by Germany's strong economy, the DAX is my favorite European index with its high volatility. European indices generally correlate well with their American counterparts, though they don't trend as well. With that in mind, why don't we try a mean reversion strategy for the DAX, whereby we speculate that a temporary price move in either direction will shortly reverse. On the lower time frames, stock indices are generally mean reverting, probably due to their large baskets of stocks and the differing opinions among investors. Before starting development, do check your broker's trading hours. I will use Ducascopy data for development, whose trading hours are from 1 a.m. to 11:15 p.m. in summer and 11 p.m. in winter. Other brokers may open later or close later. The hours surrounding New York 5 p.m. generally have little price movement, but ideally you want your broker's hours to match your data's hours as closely as possible. I don't believe in fancy strategies, so let's just start with the classic Bollinger Bands reversal, where I go long when there's a close below the lower Bollinger Band. I'll let the genetic builder fill in one other entry condition. For exits, I will include a stop loss, profit target, and a bar-based time stop, which Kevin Davey mentioned was one of his favorite exits. I'll use the full 11 years of data on the 30-minute time frame. For a change, I'll remove weekend exits. The stop loss will be mandatory, while the profit target and time stop will be optional. A fixed lot size of 0.1 will be used for backtesting, since I don't want position sizing to muddy the water. Let's see what the builder came up with. A second mean reverting condition was added, whereby for longs, prices have to cross below the lowest low of the past 97 periods. Sometimes the English translation isn't that precise, so here's the MQL4 code. Starting with the second half, at the most recently closed bar, the open has to be lower than the lowest low of the last 97 periods, starting from the prior bar with a bar shift of 2. You must use the prior bar because the open can't possibly be lower than the lowest low. Here's an example, where the open of the recently closed bar at 17,036.46 being lower than the prior lowest low of 17,036.47. For the other half of the condition, at the prior bar, the open has to be higher than the lowest low. Toggling the Bollinger Bands, it's clear that the close was below the lower band. A tight 2.3 ATR stop loss was added, together with an 86 bar time stop, which takes care of profitable trades, like the one shown here. Shorts are flipped, with the close above the upper Bollinger Band and a crossing above of the highest high over 97 periods. The 11-year backtest is pleasant. The out-of-sample profit factor is solid at 2.45, but there were only 29 trades. You can lengthen the out-of-sample period at your discretion, though you will have less in-sample data to train your strategy on. No problems with the equity curve. With the tight ATR stop loss, 70 of the 73 trades that made it to the time stop were profitable. If I wrap a simple fixed fractional position sizing around the strategy, returns compound nicely at 22% a year. Trading frequency is kinda low though. What if I trade this strategy together with the seasonal Nasdaq strategy mentioned earlier? The Nasdaq strategy is a momentum strategy that exploits the bullishness often observed on the first trading day of the month, so in theory it should be uncorrelated with this mean reversion DAX strategy. After ensuring both strategies have the same start date, I combine them into a portfolio and do a correlation check. The slight negative correlation here is great for smoothing out the overall equity curve. In isolation, each strategy has about 470 days of stagnation, but the portfolio stagnation is lower at 330 days. So even if you trade correlated markets, a different trading style can produce an uncorrelated strategy and diversify your portfolio. To learn more about the aforementioned Nasdaq 100 strategy, check the video at the top. If you want to use Quant Analyzer's genetic algorithm to create a diversified portfolio, check the video at the bottom.